All right, good morning. It is Monday, September the 15th, 2025. Beautiful weekend here in Charleston. Our family, we just kind of found ourselves in the backyard quite a bit, throwing footballs around and a little bit of time on bikes. Nick from our office hosted kind of an impromptu housewarming party for our friends, for like a really, just kind of our close circle of friends. So just a great time over there. The kids were running all over the place, from the fire pit outside, inside on the bunk beds. My middle child, my son, ran kind of par for the course, but had a blanket over his head and was, I think, pretending to be a ghost and just ran full speed right into a wall. So he's got a nice big bump on his head this morning to show for that. But really kind of shilks to host, and felt like we needed it. It seemed like a really emotional week last week with 9/11 and then this senseless shooting, and just one of those weeks you kind of squeeze your loved ones a little tighter. So nice week of reviews last week. We kick off week 4 this morning. Just time is just flying by. Market last week up a touch, roughly 1%. The economic data we received last week all but guarantees a Fed rate cut here. So the Fed gets together. The announcement is Wednesday. All right, so widely expected 25 basis point, so 1/4% rate cut. All right, so last week's economic data. Inflation largely in line with expectations. Core, kind of the consumer price index, up 3.1% year over year, which that was expected. The producer price index had a 2 handle, so that was good. But really, more so, that the employment picture is becoming a little questionable. All right, so obviously the August employment report we received, not a good number. Okay, and then last week on Thursday we had initial jobless claims. Last week were 263,000. Okay, that's the highest initial jobless claims number in 4 years. Okay, and we've been talking about it for a while. It's really surprising how resilient just the jobs market has been, just given in the face of interest rates for being this high for a while. All right, so therefore the Fed's cutting Wednesday. It's just a matter of how much. All right, so market expecting just a 1/4 point. There's kind of this increasing probability that they could cut by 0.5%. All right, so we'll see. A question we get a lot is, what's the market going to do if the Fed cuts? And as I think some of you are aware, markets are constantly forecasting and repricing all these probabilities of interest rate cut, no cut, bigger than expected cut. And so just given it seems like consensus is this 1/4 point cut. So for starters, if they don't cut, the market would not like that, because the market is certainly not pricing a 0, so a not cut. So, but if we get the 25 basis point cut like most people expect, the market will most likely be the direction from there will most likely be based on the Fed's adjustment of their what they call the dot plot, and that just means not this month's meeting, but like future meetings and where they think the Fed funds rate will be. All right, and so they update that kind of each meeting. So and then who knows, if they do cut 0.5%, like the market could potentially like that. Again, and just because the short end of that curve gets cut, it does not mean necessarily that the 10-year would follow with it, right? That was another really good question we received from someone in reviews last week. If the Fed cuts, does that mean mortgage rates are going to go down? And it's like not necessarily, right? Because if the Fed cuts, the Fed controls the short end of the curve, right? So if the Fed cuts the overnight rate, which that does impact like HELOCs and other things, but mortgages are more based on the 10-year. And you could, market participants, you could make the case like with the Fed cuts and borrowing becomes cheaper, for consumers and businesses, you could argue longer term that could be inflationary, which that's why the 10-year Treasury and further out on the curve might not come down with it, right? So you get to kind of have the which makes markets fun. So with that being said, questions, comments, concerns, please don't hesitate to reach out to our team, and we hope you have a great week. Thanks.